Your first trade is designed to humble you, not because the market is cruel or unfair, but because it exposes every false belief you carry about money, control, skill, and certainty. And most beginners step into trading with confidence built on watching videos, reading posts, and seeing screenshots of profits, believing that understanding a setup, indicator, or strategy means they are ready to win. But the moment real money is involved, everything changes. Because emotions show up in ways no tutorial can prepare you for, and suddenly every small price movement feels personal. Every red candle feels like a mistake, and every green candle feels like proof that you were right. And this emotional attachment is exactly why the first trade almost always turns into a lesson instead of a win. Because trading is not about being right, it is about managing risk in an environment where uncertainty is constant. And the market quickly teaches beginners that it does not care about their confidence, effort, hopes, or opinions, and fear appears the moment the trade moves slightly against them, causing panic, hesitation, early exits, or moving stop losses, while greed appears when the trade moves in their favor, pushing them to hold too long, add more size, ignore exit rules, or believe they cannot lose. And this emotional tug-of-war creates stress, confusion, and impulsive decisions that destroy discipline. And what makes the first trade especially humbling is that beginners often risk too much, believing that one good trade will change their life, not realizing that one poorly managed trade can do serious damage to both their account and their confidence. And when that loss happens, it feels shocking, unfair, and personal. Because they expected the market to reward knowledge and effort, but the market only rewards discipline, patience, and respect for risk. And this moment forces a hard choice. Either blame the market, blame the strategy, or accept that trading requires a complete shift in mindset. And the hidden lesson inside that first loss is that losses are not failure. They are the cost of participation. And the goal is not to avoid losses but to control them so they do not control you. And successful traders learn to separate their identity from their trades, understanding that a losing trade does not mean they are bad or stupid. It simply means probability played out differently this time. And the market humbles beginners by teaching that certainty does not exist. Only probabilities and risk management do. And once this truth is accepted, trading becomes less emotional and more mechanical. Because the trader stops trying to predict the future and starts focusing on execution, consistency, and survival. And over time that first loss becomes one of the most valuable experiences. Because it breaks ego, builds respect for the market, and teaches patience, humility, and discipline that no book, course, or mentor can truly teach. And traders who succeed long-term are not the ones who avoid being humbled, but the ones who learn from it quickly, adapt calmly, and continue showing up with better risk control and emotional awareness. And this is why your first trade is designed to humble you. Because without that moment of humility, real growth in trading is impossible. And the market makes sure you learn that lesson early, whether you are ready or not.